Hello, and welcome to the 248 Emerging Companies Fund's quarterly report for September 2025. During the quarter, investor sentiment continued to improve. The Small Ordinaries Index rose sharply, approximately 26%, over the 6 months to the end of September. The rise was largely driven by investors seeking exposure to smaller, higher growth companies expected to benefit from falling funding costs and renewed economic momentum. While IPO activity remained modest, several high-profile transactions, including the relisting of Virgin and GemLife's expanded float, indicated a gradual reopening of equity capital markets. During the quarter, we received the final 2025 numbers from the majority of the portfolio companies in both Funds 1 and 2. On the whole, we're very pleased with their performance, and we'll walk through some key highlights in just a moment. Also during the quarter, Fund 2 exited its position in BirdDog Technologies, originally a pre-IPO investment made in early 2021. The company listed later that year but saw a sharp decline in 2022 due to market weakness and deteriorating performance. Despite our best efforts to engage with management and the board and protect shareholder value, the company lost over 80% of its market cap. In July 2025, BirdDog announced a buyback and moved to privatise. With limited influence over the outcome and continued agitation for change, it was largely ignored, and we participated in the buyback. The investment in BirdDog was disappointing and not an experience we'd like to repeat. Now turning to the highlights for the other portfolio companies. It's an exciting time for Bellroy. They've expanded into luggage, launching their first line of products in June, and sales have exceeded expectations. The company also opened a China office where growth is strong, and they're exploring direct-to-retail options and continue to invest in product development and distribution, all the while staying profitable. With excess cash on hand, capital management strategies are now being considered. CleanSpace reported strong FY25 results, 30% revenue growth, improved gross margins at 75%, and a return to positive cash flow. The new CEO, Gabriel, has made a strong impact, and the company has grown globally with promising US sales commencing.
Studiosity is heavily investing in its AI-enhanced literacy and feedback tools, gaining recognition as a thought leader in AI use in education. Despite industry challenges like staff resistance and budget pressures, demand is growing. They've added 19 new clients to trial their product in 2025 and have made several key hires, particularly in the US. Profitability remains strong and capital management is on the table. Money tech is growing steadily despite tough competition from the big banks and non-bank lenders. The company's innovation in business and equipment finance is paying off. They're actively exploring loan book acquisitions amid a wave of M&A in the non-bank lending space. Maneuver had a standout FY25 with strong revenue and EBITDA growth. They added 60 plus clients, including a major partnership with car sales, which won an industry award and resulted in the launch of the highly successful pay-through car sales product. The momentum has continued into the new financial year, backed by a strong cash position. 2025 marked a major turnaround for Deep Blue Company. Under COO/CFO Michael Burgess, Deep Blue hit $40 million in revenue and posted their first profit. The focus is now on operational efficiency and exploring new growth opportunities. FY25 was transformational for Orbix. They completed a reverse takeover of Design Milk, streamlining for a planned ASX IPO. They've raised $7 to $10 million and have appointed a broker. Additionally, the company also secured a major partnership with NBC Universal to launch Jurassic World Archipelago in September 2025. While full year results are still to come, Lendy's first half 25 results were impressive. Their horizontal integration strategy, bringing together brokerage, conveyancing, and buyer advocacy, is gaining traction with profitability in the core business. With the Aussie merger now largely complete, we're excited about the growth potential over the coming 12 months.
Automotive Superstore delivered record revenue in FY25, almost 4 times the level at the time of investment, and has maintained consistent profitability. A new Melbourne warehouse and a wave of white label SKUs helped lift volumes and margins. While trading is moderated a little ahead of Black Friday, a new Queensland facility is on the horizon. Encompass has repositioned as a pure-play AI readiness SaaS company following the divestment of Infomotion in late 2024. The focus is now on scaling enterprise ARR to 8 to 10 million ahead of a planned capital raise. And 248's convertible note was extended to December 2025 with an increased interest rate of 15%. Cloudworks has doubled revenue since our investment and continues on a strong growth path. The company is actively exploring strategic options and we'll provide an update on these when we can. Boost Media joined the portfolio in FY25 and we've been impressed with the team and their unique approach in the media space. With a calendar year end, they're now in the final stretch of a very busy global events season, servicing TV, radio and out-of-home clients. And this is expected to lift earnings by 2+ times year on year. Finally, Future Group had a standout FY25 with $91 million in revenue and $28 million in EBITDA. Alongside record profits, the team simplified operations with the transfer of Future Super and Verve into the Smart Future Trust. In July, a secondary sale occurred at our holding valuation, which we opted not to participate in.
Now looking at fund performance. Fund 1 has committed capital of $1.80 per unit. Distributions to date total $1.31 and the net asset value as at 30 December was $1.39 per unit. Combining the total amount distributed to the net asset value comes to $1, so it comes to a total of $2.70. The 3-month performance net of fees was approximately 4%. Since inception, net of fees, the fund has returned approximately 50%. The since inception net of fees IRR as at 30 September was approximately 12%. There are 8 remaining positions left in Fund 1. Each company is actively engaged in a process or is in discussions regarding a sale or liquidity event. Now looking at Fund 2. Fund 2 also has committed capital of $1.80 per unit. Distributions to date total $0.35 per unit and net asset value was $1.53 per unit. Combining the total amount distributed to the net asset value comes to a total of $1.87 per unit. The 3-month performance of the fund net of fees was 0.22%, and since inception net of fees, the fund has returned approximately 4.5%. The net of fees IRR was approximately 1.2%. As at 30 September, 9 investments remain in Fund 2.
As always, if you'd like any more information about anything we've discussed now, please don't hesitate to get in touch with us. We'd be more than happy to assist, talk you through any of the assets or the progress of the funds. Thank you as always for your support, and we look forward to talking to you soon.